Hi, since the date of implementation of GST, the GST department has made a lot of changes in terms of tariffs, in terms of rules, and so on. Recently, the department has come up with one more new notification which restricts the availment of input tax credit. And I believe this notification brings a quite task to all the GST taxpayers while filing their returns. In this video, let us understand what exactly this notification is all about. As per this notification, the GST department has restricted availment of input tax credit in respect of invoices and debit notes, the details for which the supplier has not uploaded. That is, the invoices which are not reflecting in GSTR 2A. What is the actual impact of this notification? Let us understand that in brief. From October 2019 onwards, a registered person cannot claim input tax credit in excess of 20% of the input tax available in GSTR 2A, for which the supplier has failed to upload the invoices as on the date of filing monthly returns, that is GSTR 3B. Further, physical copy of invoice is not sufficient to claim full input tax credit. You have to note here, earlier the input tax credit was allowed on the basis of physical invoice copies. You are allowed to take 100% credit on the basis of input tax credit on the basis of physical copy of invoices, but effective this notification, you are not allowed to take full input tax credit based on the input physical copy invoices. Instead, you are eligible to take input tax credit based on the input tax credit available in GST at 2A. Further, in case input available in books is more than the input available in GST at 2A, eligible input is restricted to input available in GST at 2A plus 20% of the input available in GST at 2A. That means there is a relief of additional 20% of the ITC available in GST at 2A. Well, let us understand this impact of this notification with some questionnaires and examples. What are the invoices or debit notes on which restriction shall apply? These restrictions of availment of ITC is imposed only in respect of those invoices or debit notes, details of which are required to be uploaded by the suppliers and which have not been uploaded. So, what is the effective date for these restrictions? The restrictions will be applicable only on the invoices or debit notes on which credit is availed after 9th October 2019. Whether the said note restriction is to be calculated supplier wise or on consolidated basis. The restriction is imposed on consolidated basis and not supplier basis. That means the credit available is linked to the total eligible credit from all supplier against all supplies whose details have been uploaded by the supplier. Well, then whether ineligible ITC which are reflecting in GST at 2A can be considered to calculate this 20% eligibility? No. Input tax credit which are ineligible for a business for a GST taxpayer cannot be considered to calculate this relief of 20% eligibility. Then, is there a restriction applicable for IGST paid on imports? Well, The taxpayer may avail input tax credit in respect of IGST paid on imports as well as documents issued under RCM, credit received from input service distributor, and etc. Hence, there is no restrictions applicable for IGST on input on import. So, how do we actually calculate this? Actually calculate these restrictions. Let us see some example. Mr. Felix is a GST registered dealer. He receives 100 invoices involving ITC of rupees 10 lakhs from various suppliers after 9th October 2019. So out of this 100 invoices, the suppliers have uploaded 80 invoices on which ITC is available to the extent of 6 lakhs in GSTR 2A. So then what is the input tax credit actually Mr. Felix is eligible to take? The ITC reflecting in GSTR 2A is rupees 6 lakhs, but the invoices he has is to the tune of ITC of rupees 10 lakhs. But the ITC which he is eligible will be different. It is neither 10 lakhs, it is neither 6 lakhs. He is eligible for 6 lakhs plus 20% of 6 lakhs, that is 7 lakh 20,000. The 20% should be calculated on ITC available reflecting in GSTR 2A, that is 6 lakhs, and not on 10 lakhs. That means he is eligible for 7 lakh 20,000 ITC for the month of October 2019. Then if supplier is not uploaded in that month but he has uploaded in the subsequent month, is Mr. Felix eligible to take input tax credit in subsequent month? Yes, absolutely yes. He is eligible to take on proportionate basis when where the invoices on which where the invoices are reflecting in GSTR 2A. So what is the minimum? Let us see in another angle. What is the minimum invoices to be uploaded as per this example to avail 100% input tax credit of rupees 10 lakhs? If Mr. Felix has 8,33,000 of ITC which is reflecting in GSTR 2A, then he is eligible to take entire 10 lakhs input tax credit. How this is calculated? This is calculated by dividing 10 lakhs by 120%. That is, if he has 8,33,000 worth of ITC available in GST 2A, then he can take 100% of 10 lakhs. So what is the difficulties other than this calculating ITC the taxpayer may face? Here is the task. When there is delay in uploading invoices by the supplier and he takes and different suppliers uploads in different months in the subsequent months, then the task of reconciliation is a quite big task for the taxpayer. So let us experience this by filing the GSTR return for the month of October 2019, which is due on 20th November 2019. Let us hope for more relief from the GST department. And signing off. Thanks for watching this video. This is Shashi Kumar, Chartered Accountant, signing off. Goodbye.